look at if they're not making money at 3,000 gold, they shouldn't be in the business. The world's come to realize that you need metals. You can't do any of these things. All the politicians talk about green and this and that. You can't do anything without metal. Essentially, if you can't grow it, you have to mine it.
Let's suppose we get a major correction. What would change then for your strategy?
Nothing. Our strategy is
the price of gold has hit $5,000 intraday for the first time in history. The price of the gold has coincided with the huge rally in silver. We're going to find out what the miners are doing in this current environment, what assumptions they're making, what they're planning for the future, given that gold and silver are both at unprecedented levels. Joe Ovsenek is here to join us once more from Tudor Gold, President and CEO. Welcome back to the show. It's good to see you here at the Vancouver Resource Investment Conference.
Yeah, good to be here. Good to see you.
Last time I saw you was in Colorado at the Beaver Creek Precious Metals Summit. Back then, silver was just breaking above 40, and gold was just over $4,500 an ounce.
Yeah.
And I think it was, gold was making new highs every single week, basically since the summertime. And it was a good environment back then. It's an even better environment now.
Yes.
What is the sentiment difference now versus last year? Let's start with that.
Well, I think it's when last year. If we go back a year.
Exactly 1 year ago.
Yeah, exactly 1 year ago. Sentiment was starting to turn a bit, but it was still, I'd say, dark days. There wasn't a lot of money coming in. You could see it sort of flowing in, the money flowing into the majors, but it wasn't trickling down to the companies below that. So the environment's, 100 and 1,000% better now than it was a year ago.
People have been swarming your booth like you're a celebrity, because you probably are, Joe.
Only because of your videos. That's why.
No, that's just because your company's done well. We'll talk about that. Yeah. The gold environment is skyrocketing. What kinds of questions have you been getting all day?
Oh, a lot of people are just focused on, okay, what do you got planned for the year? Where are you taking this company? What do you want to do?
Okay. We're going to talk about that. Yeah. First, I want to talk about some of the mistakes in 2011 that the industry has made that the industry wants to avoid this time.
Yeah, well, I think if we go back to 2011, peaking, not quite in this, it wasn't quite a frenzy as this is, but the industry and the majors and intermediates went on a big spending spree, bought a lot of projects, and unfortunately, a lot of the projects they bought were marginal or needed higher prices, and so they blew out a bit of share structure. They didn't have the cash. And I think that's the biggest difference this time around than then is now everybody's building cash. And so they're generating a lot of cash and they're pulling it on their balance sheets. They were issuing a lot of stock back in 2011, really blowing out their stock structure for acquisitions. And then the price of gold fell and a lot of those projects were not, you weren't going to build them. How's that?
I think a lot of people want to know how sustainable this rally is. How would you approach that question?
Well, I think there's a huge, you can always say it's different this time, but I really believe it's different this time. In 2011, we were still in that, you listen to different guys talk and they talk about the liberal world order. And Carney talked about this the other day as well. And I do believe we are going from that. We had one superpower in the world, the United States, in 2011. China has come a long way. Russia's invaded the Ukraine. And so really, we're looking at a multipolar world. Really, I think it's a bipolar world, China and the US. And because of that, if you're on the China side of that divide, you're not going to want to hold US dollars, US treasuries, because look at Russia. They were shut out once they invaded Ukraine. So I think that's the big change, and that's why you're going to see gold continue to perform and build a base well above where we were back then.
Last time you were on the show was mid-September 2025,
Correct.
So exactly 4 months ago. Yeah. Gold was trading at $3,600. And I remember you said this, and this was the title of our video last time. People can check it out once again. $3,600 gold was early days.
Great.
So you made that call perfectly. And I think a lot of people were skeptical of statements like that. $3,600. Yeah. Keep in mind, though, because a year ago it was at $2,000. Yes. It's only gone up 50%. It's still early days. And it's gone up another 50% since $3,600. Pretty much 40-something percent.
So,
what were the assumptions you were making in September that made you make that statement that it was still early days at $3,600 gold?
Well, I think it's the same thing I'm saying now.
Yeah.
You could start to see that schism in the different nations of this world, and you could just see that more and more money. You need a common currency somewhere, and gold serves that purpose. And I think you could see things starting to separate, and they're continuing to separate. You just have to read the news. There's that tension between the various blocks. And that will continue to drive the gold price.
Do you remember the gold price when you first started in the industry?
Oh, I started in the mid 90s. We were about $300. It went up to 400 something. Then it went down to 250 in the early 2000s, and it's been a nice ride since then. Continued. Well, gold's had a great run since coming out of the Y2K.
If you had to explain to somebody who is maybe new to the industry how mining is fundamentally different at $5,000 gold now versus when you first started in the 90s, how would you answer that question?
Well, the bottom line is the product you're selling is worth a lot more than it was then.
Yeah.
Your costs have gone up, but not near to that level. So there's just more profit in each ounce of gold you produce nowadays.
Which translates to higher leverage to the gold price, I suppose.
Well, yes, correct. Yes,
Okay.
if you look at it that way.
If you had to do a pre-feasibility study now and plan for your future, what gold price assumption would you use?
Good question. We're working towards a PEA at Tudor Gold, and one of the questions is, what gold price do you use? Do you use, traditionally, especially in the United States, they talk about 3-year trailing averages. We're looking at the 2-year trailing average just because it's so much has changed in the last while. So from our perspective, looking at it, I think we'd probably come in somewhere around, if I was to do it today, somewhere around $3,000. I don't think I'd push it much beyond there, but around 3,000, and that's still a nice gold price. There's a lot of upside above it, but let's see how, as we move through this year, where gold settles out.
You think the producers are still making money at $3,000 gold?
Oh, look, if they're not making money at 3,000 gold, they shouldn't be in the business.
Yeah, okay. Fair enough. What are your next milestones that you plan to target for 2026?
Well, we just announced an updated resource estimate, and what we like about that is, for this resource estimate, we put a lot of time into trying to better define the higher grade gold within the deposit. And we've done that. Now, as you raise your cutoff, which is, how much each ton of rock is worth that you mine, we've got, probably about I think we have 5.8 million ounces grading around 2.85 grams of gold per ton with copper and silver at our highest cutoff, $175 a ton, $125 a ton. We're at 8.6 million ounces of gold grading, about 2.3, 2.4 grams of gold per ton plus copper and silver. So building on that, what we're doing for this year, we have metallurgy underway, and we're taking that resource estimate at the higher cutoff, and we're trying to put a mine plan around the shapes that that can give us value at about 100. Well, we'll see what the economics look like, but at the higher grade shapes, with the idea that if we can get our metallurgy together with a nice mine plan, we would then push to complete a preliminary economic assessment on the project for this summer, if all goes well.
Has M&A interest picked up since last September when we talked?
I don't think it's, you hear a bit deal here and there, but it comes back to your earlier question, how the majors sort of blew up in 2011, and that they're being very disciplined. They're not going around chasing projects, paying up for projects. And so you don't really see that M&A happening yet. But look, mining is all about depletion. Once you produce an ounce of gold, that's one less ounce of gold you have. So you need to restock at some point. So at some point, M&A will pick up. I don't see it there yet.
Is that because investor capital hasn't flowed into the equities to the same extent that it should before it happens?
I'm sorry to jump in there. I think it's the companies of, the big shareholders of the companies look at, be disciplined. Don't do anything stupid with your share structures. Don't go chasing projects. But at some point, those investors are going to say, where's your growth? And at that point in time, they're going to have to go looking for projects. The difference this time is they'll have a lot of cash on the books.
And let's say if you were to put yourself in the shoes of a producer or a shareholder at a large producer, what would the criteria be for selecting a project to acquire in 2026 at current environments?
Well, it all comes down to risk.
Yeah.
And so you have to look at the various risks associated with the project and see what makes your comfort level. Major risk always is permitting. Can you permit the project? Is it fully permitted? Once you pass that threshold of it being fully permitted, then you're just down to construction risk. And that's something a big company look at. If you have to be able to handle construction risk to build a mine, but that's a lot easier to handle just construction risk than taking on permitting risk or even economics risk. Is this project economic? So
several people have told me that the market caps of the juniors and even the developers aren't fully reflecting the spot price today. And yes, the prices have moved for the stocks, but they're still reflecting maybe $3,600, $4,000, $3,500 gold.
Yeah, I think you're right. Yeah, the stock, the value of the shares of these companies, their market caps don't reflect the current spot price. They're behind by $1,500, $2,000.
Well, your stock. I'm looking at Tudor Gold's stock price. It was at 446 just at the start of the year. Sorry, it was at 90 cents just at the start of the year, and now it's at 142.
Yeah.
And that's nearly a 50%. Yeah, exactly a 50% increase just in the span of a couple of weeks. So you talked about a news release, a resource estimate that came out recently, but it started moving before that. What happened?
Well, I think the gold price started going up. We've been trying to get the word out on Tudor and telling the world, look, this is a great project. So it's a bit of a combination. People knew the resource estimate was coming. They know it's a great resource and it's only getting better. So I think there was a lot of things there. And as I said, the gold price was moving up. And so people were starting to pay attention. Okay, if I look at all the companies in that exploration world, who's got something that's really substantial?
Yeah. Well, now that you're getting a lot more attention from basically everybody, what are you going to do differently, if anything, than let's say what you had planned 6 months ago?
Nothing differently. We were planning to get this resource estimate done, define the high grade, and look how we can build a mine that we can be proactive about. We don't want to design a mine that needs a major producer to come in and build it. We want to design a mine that's going to be a tier 1 mine, north of 300,000 plus ounces of gold a year, but something that we can build. So we're looking at a smaller footprint underground mine, CapEx in that $1 billion to $1.5 billion range. That's something we can really put together and build. Yeah. We have the capacity for that. And so that's our focus, and that's how we're going to create value.
Your shareholder base, has it shifted between the retail investor side with the institutional investor side over the last year? Have you noticed any changes in that demographic?
Not yet. We're essentially more on the retail side. We did do a financing in December, and we started to see a bit of institutional participation. But really, we're a retail shareholder play, and we've got great shareholders. They come at the conference here. We've had a lot of shareholders come by just to say hello. How you doing?
Yeah, all right. And how are you doing, Joe?
We're doing well. It's just been great.
Yeah. Have you been getting enough sleep, Joe?
Absolutely.
All right. Just give us an overview of the deposits one more time for those of us who haven't watched our last program. Tell us about Tudor Gold's main projects.
Okay, our main project is the Treaty Creek project in northwest British Columbia. We're in the Golden Triangle, just to the east of the Alaska Panhandle. We have an 80% interest in the Treaty Creek project. There's one defined mineral resource on the property now, potential for many others, but we're focused on the one which is called the Goldstorm deposit. We have 24.9 million ounces of indicated gold and another 4 million ounces of inferred gold at a $50 NSR cutoff. So that's one of the bigger resources you're going to find anywhere in the world. It's one of the biggest discoveries in recent times, and it's got better grade than most of them. It really is a standout as a deposit.
Okay. Well, you haven't done anything differently now that the gold price has gone up. Let's suppose we get a major correction. It goes back down towards $3,000. What would change then for your strategy?
Nothing. Our strategy is putting a higher grade, it's not high grade, but that 2 to 3 gram gold, let's say a 3 gram gold mine underground in production. And that's what how we believe we can create value at Tudor. And that's what we're going to keep pushing on.
When do you plant and put that into production?
There's a lot of moving parts here,
Yeah.
but look if we get a PEA this summer, we would move on to a feasibility study. We got to get underground, do some drilling. That's probably the slowest part. So, we got a permit, it's looking 4 or 5 years, but a lot of news between now and then and a lot of value we can create between now and then.
Several companies are operating the Golden Triangle. Would you ever consider a JV?
Look at that. We're not fans of JVs. When it comes down to it, there's too many cooks in the kitchen, hard to make decisions. We want to drive a project forward fast. And so we'll do this on our own. When it comes to building the mine, well, then we'll see whether is it worth. Do we need the JV, or is the market there that we can raise $1 billion and a half to build a mine? If we can, we'll do it on our own. Let our shareholders get all the upside.
Well, now that you're up 50% of the stock, gold is $5,000, are you taking advantage of this environment now to raise more capital?
We raised capital in December, so we're funded we have a big exploration program planned for this this summer. To find another resource on the property, develop one of these other deposits.
Right.
And we also have plenty of cash to pursue our corporate objectives. So no, we're good, well funded. No plans to raise any cash right now.
Typically, does capital raising depend on the cycle of the metals, or do you just have a fixed schedule in place?
Look, it's a lot easier to raise money when the metal cycle's up. You got to call a lot of people when the metal cycle's down, and it's a different world.
When gold was at $3,600, it was early stages. It's gone up 40% now. At what point, what developments in the world, or perhaps even with investor sentiment, would you need to see to make the conclusion that gold has matured a little bit more in terms of demand? Maybe it's not a price level, but it's just changes you like to see.
I think we've seen it. I think the big thing here is what we feel, and from what we can see, central bank buying is what's driving the price. It's not investors. Like at the margin, a lot of investment buying. But the big buyers, you got central banks, you got Tether.
Yeah.
Tether's, what do they have? 20 plus million ounces of gold on the book.
Right.
So, there's a lot of buying out of these big central bank institutions.
Let's flip this around. If the central banks and these big institutions were to stop buying gold, or perhaps even sell their gold, what would the world look like in that environment? What needs to happen for them to make that kind of decision?
Well, I think we'd have to get back to having a nice, friendly, peaceful world where everybody's getting along well. China and the U.S. have gotten back together. But I just don't see that happening, and it's not just this administration. Yeah. I don't see that happening in the coming administrations.
Tell us about your career, Joe. You studied engineering in school, and then I think you worked as an engineer, geologist in the start of your career.
So I'm a mechanical engineer. I stay away from the rocks, and that keeps everybody happy.
Okay.
Yeah.
How did you end up where you are in the C-suite? And as well, how did you choose gold as the metal that you're working on now?
It's interesting. I worked as a mechanical engineer for a while, went back to law school, worked as a lawyer, doing more corporate type work. And then a group of guys approached me from Silver Standard Resources.
Yeah.
I joined them as a lawyer, and I worked my way up with them. And so we were in the silver business. Silver Standard, we took that company from, I think when I joined, our market cap was maybe 50 million. We left to form, Pretium Resources in 2010. By then it was a couple $2 billion. We had a couple billion ounces of silver in the ground and a operating mine, and we had a market cap north of a couple billion.
Okay.
But so that was a silver business. But the one thing you learned while you're in the silver business is it's hard to find a pure silver deposit. Usually it's a byproduct, lead, zinc, silver. Or is it with copper, or is it with gold? So there are some. We had a few that were primary silver projects, but most of them are combined with gold. And when you look at things, and we would look at stuff and say, well, look at, it costs the same for us to mine an ounce of gold as it does to mine an ounce of silver. And yet gold's paying us 80 times more, 100, whatever the ratio is at the time. And we just thought, hey, let's give that a try next. So we moved on. Now we had a great project to start with. We started up Pretium Resources. We bought a gold project off of Silver Standard that they didn't want because they were a silver company. And it became the Bruce Jack mine, which is now operated by Newmont.
Okay.
So it was a shift that way, and opportunity and luck.
If you, let's say, I'm not saying you will or need to, but let's say if you had to operate a second company in another metal today, what would that be?
We'd stick with gold or gold copper.
Okay.
Gold and copper, I think, is a nice blend.
Okay. Because of the interplay, where I guess the synergy between gold and copper, they're often gold is a byproduct of copper ores?
Not more that, like, if usually they're counter-cyclical. I'm having trouble here.
I see.
But when the economy's strong, maybe interest rates go up, gold comes down, but copper is strong with a strong economy.
Sure.
Excuse me.
But they've been moving the same direction.
They're moving the same direction now. But I just see huge demand for copper for many years to come. And it's hard to permit big copper mines.
How would you describe the entire commodities complex now to somebody who is maybe not in finance? Like, one of your friends who doesn't work in the industry. Everything's gone up. Silver, gold, palladium, platinum, copper is at all-time highs just this week. What's happening right now in the world?
I think the world's come to realize that you need metals. You can't do any of these things. All the politicians talk about green and this and that. You can't do anything without metal. Essentially, if you can't grow it, you have to mine it.
Yeah.
And so you want your latest cell phone AI. Well, you can't have AI without power. You need copper to conduct electricity. All the metals come to the fore when you're trying to grow these various things that are part of the modern economy.
Yeah, and there's probably going to be less globalization going forward. Mark Carney, PM of Canada, made a speech at Davos about how he thinks globalization is going to end. I wonder how that's going to affect your industry if people trade less with each other, let's say.
Look at for I think it's great because it doesn't matter whether they trade less with each other. There's a limited quantity of metal out there, and both, like I say, it's going to be a bipolar world. Both sides need it to move forward. Yeah. So there's going to be mining everywhere. I think mining, if you're going to go into a business as a young guy or a young woman, mining's a great field to get into at this point in time.
And finally, just on legislation, if you had to ask the government to change some legislation that would make your industry a little bit easier to operate in BC, for example, what would those changes be?
I think the biggest thing up here in Canada is we have the federal government with their Impact Assessment Act. And so you've got a permit with BC, you got a permit with the feds. It would just make things flow so much easier. Nice, one regime, permit, and go, rather than dealing with the two regimes.
And that would shorten the permitting time.
Shorten the time and cut your cost.
Yeah.
And, it would just make life simpler.
All right. Well, thank you so much, Joe. Where can we follow your company?
Tudor Gold.
All right. We'll put the links down below. Follow Tudor Gold, or if you're at the VRIC, or if you're at the next conference, drop by Joe's booth. Thank you so much, Joe.
Yeah,
appreciate your time.
Look forward to it. Thank you.
Thank you for watching. Don't forget to like, subscribe.